Are you ready to take your finances to the next level in 2026? In this video, we're diving into the top 8 investment strategies that can help you grow your wealth, minimize risk, and stay ahead of the game. From stocks and real estate to crypto and alternative assets, these strategies are designed for both beginners and seasoned investors looking to maximize their financial growth. Whether your goal is long-term security or rapid wealth accumulation, understanding and applying these strategies can make a huge difference in your financial future. Don't miss these insights that can give you a real edge in today's fast-changing market. 8. Climate-centric asset allocation. The transition to a low-carbon economy is accelerating faster than any previous decade. Governments are tightening emissions targets, and consumers are demanding greener products. By allocating a slice of your capital to green bonds, renewable energy ETFs, and high-growth clean-tech startups, you position yourself to benefit from regulatory tailwinds and shifting consumer preferences. A balanced mix of blue-chip stability and high-growth green disruptors can capture upside while mitigating volatility. Think of green bonds as the steady, predictable cash flow of a utility company, but with the added benefit of a carbon credit that can appreciate as the world moves toward net zero. 7. Decentralized finance, DeFi. Yield farming. Blockchain technology has moved beyond speculative hype. Reputable DeFi protocols now offer structured, audited, yield-generating products that can rival traditional savings rates, especially in a low-interest rate environment. By staking or lending your crypto on vetted platforms, you earn passive income through interest, liquidity mining, and token rewards. The key is rigorous due diligence, smart contract audits, regulatory compliance, and a clear understanding of the underlying asset's volatility. Imagine a world where your digital wallet becomes a mini-bank, automatically earning you a return that outpaces the 1–2% you might get from a conventional savings account. DeFi also offers the possibility of yield harvesting strategies that automatically move your capital between protocols to capture the highest rates, turning your crypto holdings into a dynamic, self-optimizing investment. 6. AI-driven quantitative trading. Artificial intelligence is the new market intelligence engine. AI models ingest terabytes of data, from macroeconomic indicators to social media sentiment, and generate real-time trading signals. Partnering with fintech firms that provide AI-powered platforms gives you access to strategies that adapt faster than human traders, backtest across historical data, and reduce emotional bias. The result is a disciplined, data-driven approach that can outperform traditional discretionary trading. Picture a trading desk that never sleeps, constantly scanning global news feeds, economic releases, and even the subtle investor sentiment on Twitter, then executing trades in milliseconds. 5. Real estate tokenization. Tokenization turns physical property into tradable digital assets, unlocking fractional ownership and liquidity. Whether it's commercial office space, residential high-rise, or niche assets like data center real estate, tokenized properties allow you to diversify across geography and asset class without the capital barriers of traditional real estate investing. The secondary market provides liquidity that was once unavailable, making this a compelling addition to a diversified portfolio. Think of it as the difference between owning a single or expensive painting and owning a share of a global art collection that can be traded on a blockchain exchange. Tokenized real estate offers the same long-term appreciation and rental income, but with the flexibility to buy and sell in fractions of a percent, and with lower transaction costs. 4. Emerging market infrastructure funds. Infrastructure projects in emerging economies, high-speed rail, 5G networks, renewable energy grids, are attracting unprecedented capital. These projects offer stable, long-term cash flows, often backed by sovereign guarantees or public-private partnerships. Investing in funds that focus on these regions provides a hedge against inflation, a source of consistent dividends, and a stake in the world's most critical development projects. Picture a fund that owns a stake in a new 5G tower network in Southeast Asia, a solar farm in sub-Saharan Africa, and a high-speed rail corridor in Latin America. Each of these assets delivers predictable cash flows, but also benefits from the growth of the local economies that they serve. 3. Thematic ETFs. focused on longevity and health. The global population is aging, and with it comes a surge in demand for healthcare, biotechnology, and wellness solutions. Thematic ETFs that track longevity science, personalized medicine, and digital health platforms tap into this demographic shift. These funds combine the growth potential of cutting-edge science with the stability of established healthcare companies, offering a balanced exposure to a sector that is both essential and rapidly expanding. Imagine an ETF that holds companies developing gene-editing therapies, wearable health monitors, and AI-driven diagnostic tools, all of which are poised to benefit from a world that is increasingly willing to pay for extended, high-quality life. 2. Cybersecurity and data privacy funds. Data breaches are costing billions, and governments worldwide are tightening regulations. Companies that provide threat detection, encryption, and compliance solutions are in high demand. Cybersecurity funds invest in firms that offer these services, creating a defensive moat that protects against regulatory fines and reputational damage. The sector's growth is driven by both the increasing frequency of attacks and the tightening of data privacy laws. Think of a fund that holds a mix of hardware-based security firms, cloud security SaaS providers, and compliance automation platforms. As the world becomes more digital, the need for robust security will only intensify, making this a defensive yet growth-oriented play. 1. Sustainable agriculture and food tech. Food security and sustainability are at the forefront of global priorities. From vertical farms and lab-grown meat to precision agriculture and blockchain-based supply chains, technology is reshaping how we produce, distribute, and consume food. Funds that focus on sustainable agriculture technologies deliver both social impact and financial upside, especially as consumer preferences shift toward ethically sourced, environmentally friendly products. Picture a portfolio that includes companies developing hydroponic systems that use 90% less water than traditional farming, startups creating cultured meat that eliminates the need for livestock, and blockchain platforms that trace every step of a product from seed to table. These innovations not only reduce the environmental footprint of food production, but also open new markets for premium, traceable products. If you found this video helpful, make sure to like, subscribe for more expert financial tips, and hit the bell so you never miss actionable strategies to grow your wealth. Start applying these strategies today and take control of your financial future.